Eyo Value Investors, how are you doing? My name is Stijn and welcome to my YouTube channel. And today we'll be looking at a multimedia company called Viacom or VIAC. As most of you have seen on the news, in your favorite financial newspaper or even on Reddit, recently a family fund called Archegos Capital absolutely imploded, which caused a lot of stocks to plummet. And today we're looking at one such company. As stated earlier, Viacom. Is this stock a good buy after it has dropped almost 60%? Or should we all stay far away from this company? So first, why did the stock drop so much? Second, what does Viacom actually do? Third, their financials. And lastly, my own buy targets. Let's go. So why did all these stocks and especially Viacom drop so hard? Well, to explain this, we first need to take a look at the Archegos Capital Fund, which is an asset management company led by Bill Wang. See, this fund invests in a couple of tech companies with extreme leverage through something called total return swaps. And I do not really think it is important to understand how this financial instrument works. But I do think it is important to understand that Bill Wang effectively leveraged Archegos' money 3 to 4 times to buy volatile tech stocks. And if you want to go more in depth into this financial instrument specifically, maybe check out the awesome explanation Sven Carlin did on his YouTube channel. Anyways, Bill Wang messed up pretty badly. He went into the red on his positions really hard. And logically, the banks that lent him the money in the first place had to liquidate or sell his positions to ensure that at least got some of the money back. And from this whole fiasco, the banks in total lost about $10 billion thanks to this extremely leveraged fund. And because these banks effectively sold a lot of positions in a lot of tech companies, some great companies dropped hard, for no other apparent reason than Archegos. And as far as I can tell, the following companies were affected. Tencent, which is down 25%, so from about $100 per share to $75 per share today. Baidu, which is down 40%, so from $350 per share to about $190 per share now. Viacom, the star of this video, which is down almost 60%, from $100 per share down to just $40 today. And next up, some companies I've honestly never heard of before. So first, FipShop, which is also down 50%. Farfetch, which is down from $75 to $45. And ticker IQ, Discovery, and GSX were also affected. So if you were willing to invest in any of these companies anyways, they could be on a large bargain right now. And out of this list, Tencent, Baidu, and Viacom stick out as companies that I personally know, could understand, and personally find interesting. But because of the whole fear of Chinese stocks potentially becoming delisted on US stock exchanges, I've personally chosen to focus on Viacom in this video. And I think we found a great company right there. So, what does Viacom actually do? Well, according to Wikipedia, ViacomCBS is an American, diversified, multinational, mass media conglomerate. And their main assets include Paramount Pictures, CBS Entertainment Group, Domestic Network, which in part includes MTV, Nickelodeon, BET, Comedy Central, and Showtime. And they also have international network as an asset, followed by the streaming services Paramount Plus and Pluto TV. So they are a traditional media company, so television, cable, etc., in combination with a new streaming service called Paramount Plus and Pluto TV. And from their 10K or annual report for 2020, we can see that the revenue streams are divided like the following. First, advertising, with about 38% of the revenue coming from this sector. But this sector has declined year over year compared to 2019, probably in part because of the pandemic, since less advertisers are lining up. Second, affiliates with 36% with a slight increase. Third, content licensing at 24%, slight decrease. Fourth and fifth, theatrical and other, both at 1% of their revenue streams. So from this, we can tell that Viacom is currently quite reliant on the revenue streams from television. And in total, their revenue was down 6% compared to 2019. Like I said before, this can be in part because of the pandemic, since less advertisers are willing to spend large sums. But just on the next page, we can see that their streaming services are actually up quite a bit compared to 2019. Actually, they were able to grow their streaming services an insane number of 49% year over year, all the way to $2.5 billion in revenue, which is about 10% of their total business currently. So the way I see this business is the following. Viacom has a couple of legacy media subsidiaries, which will continue to generate quite a bit of cash. But these sources of revenue will decline slowly as more and more people start using streaming services. And that's where the second part of this business kicks in, their Paramount Plus and Pluto TV streaming services. For just the first quarter of 2021, Viacom was able to add 6 million subscribers to their streaming services, to now have a total of 36 million subscribers. That's an increase of almost 20% in just one quarter. And that leads me to believe that they will continue to exponentially grow this part of their business, especially with all the exclusive content Viacom has, from Nickelodeon to Paramount Pictures. If you were thinking of investing in this company, I would advise reading into the customer satisfaction of their services. So how is the content of Paramount Plus? How is the ease of use of Pluto TV? People actually recommending it to their friends, family and peers. That is important information that can show you the continued growth potential of Viacom. And it is something that I cannot hand you out on a platter. So to summarize this part of the video, Viacom is a well-diversified media company with a couple of legacy media outlets from yesteryear, still generating healthy amounts of cash flow. And besides this, Viacom is also expanding and growing their streaming services out of the business, and the sky does seem the limit on their potential here. But how are their financials? Well, for this part of the video, we will be using the toolbox from Real One Investing, which is a paid subscription service that allows you to look into the financials of a company extremely easily. Do keep in mind that the red and green color codes are extremely harsh, and that when something is red, it doesn't necessarily mean that it's bad compared to the sector it's operating in. But from this quick overview, we can see that Viacom is extremely good in their ROE, or return on equity, and on their ROIC, or return on invested capital. See, above the 10% mark is great for any company. And this company was able to invest their capital effectively for 7 years already, with a 13.2% average during this time frame. That means that if and when Viacom has cash or assets on hand, I believe they can effectively invest that capital. And this is one of the most important metrics in my opinion. From this overview, it seems that their earnings per share or EPS growth is kind of all over the place though, which is quite sad. However, if we zoom in a bit more through macro trends, we can see that except for 2017 and 2020, Viacom do seem to be in an upwards trajectory in their EPS. I'm not that worried about this metric necessarily, and I think them growing their active subscribers on their streaming services is way more important for now. Another metric we should look at is debt, which comes in at 8.14 years. And this means that if they were to use all their free cash flow, they could pay off their debt in just 8.14 years. And we can see on macro trends that their long-term debt has skyrocketed in 2020, probably thanks to the pandemic. So although their financials do not look that promising on first glance, their return on equity is really solid and shows continued health in their business plan. Their debt is quite high, but I personally do not think it is something to worry about just yet. And it seems that if Viacom is able to increase their active subscribers to their streaming services without increasing their debt burden too much, they are a great company to invest in. But what is a fair price to pay for this company? And that of course leads me to the buy targets part of this video. So for the year 2020, Viacom's EPS or earnings per share came in at $3.92, and their latest trailing 12 months EPS comes in at $4.52. So we'll be using the latter number, $4.52. And since we are at a low compared to the almost $8 high EPS, I think we can use a slightly higher growth number than I would normally use. So based on their continued rate of invested capital and ROE, and because they are currently in a pandemic too with less advertisers lining up, I think Viacom is able to grow their EPS at about 20% compounded for the following 10 years. So you guys can change these numbers if and how you desire. Just check out this video where I did an in-depth explanation into this valuation method. So next up, PE ratio, and based on past performance, I think a PE of 10 is fair for this company. So those numbers lead me to believe that for the year 2031, Viacom could reasonably manage an EPS of almost $28 per share. That multiplied by their future PE ratio of 10 gets us to a possible future share price of $280 per share, meaning that the company has the potential to go up almost 600% in just 10 years. according to these calculations and my opinions. Now we need to calculate that backwards at some kind of return rate. I personally take 15% since this is my minimum return on investment. So that gets us to a fair share price today of about $70 and my own margin of safety or heavy buy target of $35 per share. So according to my opinions and calculations, Viacom is a heavy buy at about $35 per share. And they could easily go up to $70 on the medium to short term. Now let's answer the main question of this video. Is this company a good buy at the current share price of about $40 per share? Well, yeah, I actually think so, yeah. You're getting a margin of safety of about 40% on your stock, which is really solid. But there is also a few ifs and buts. The company is a little higher on that than I would have liked. And sadly, I cannot really tell you about their competitive advantage in the streaming services, since I cannot really tell you much about this from personal experience, since I am European. And the streaming services are the main premise of this investment anyways. So this is for you to research. I've personally opened a really small position, around 1% of my portfolio, on Viacom with leaps, so long-term call options, with a strike around $40 and expiration of 2023. That means do take my opinions with a grain of salt, and do make sure to do your own research. I am no financial advisor after all. Anyways, that's it. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.